So how do mutual funds actually generate out income in retirement? There's been some folks that have raised the suggestion that mutual funds aren't really a very good option to generate out income in retirement. So we thought we would take a moment on the program and walk through exactly why they are the single best option to generating out retirement. Of course, those folks that raise that suggestion that mutual funds aren't particularly good for generating out retirement, they are generally pushing a solution that we don't really think works that well at all, and a solution that is a high expense, high commission, illiquid, loss of investor control investment that they never quite ever really get around to talking about. But we know their secret, or should I say their dirty little secret. And yes, in fact, it is the A word. And no, not that A word. It is the annuity word. All you have to do is look back on our program last week to know about our view in depth on that. But we'll save that for another program. But we want to get to the meat of that, because after all, we've been doing it for 35 years, started by my father-in-law, Jack Nelson, 35 years ago. And so for 35 years, we've been generating out income pretty successfully and pretty regularly for hundreds and hundreds of Central Floridians that are in retirement. So we'll take a moment and share with you our little secret on it. Welcome to Dollars and Cents. This is where we help you make sense out of all of life's decisions involving your dollars. We're Central Florida's longest running radio program, coming to you live Sunday mornings on the News Radio Orlando network and the 96.9 The Game network as well. We're also one of the top 25 financial planning podcasts on the World Wide Web, with over 10,000 downloads of our podcast program. My name is Joel Garris. I'm a certified financial planner, certified financial fiduciary with Nelson Financial Planning, where our team of certified financial fiduciary stands ready this very week. We're doing phone calls, we're doing Zoom calls, video calls, and we're even doing in-person conversations. We've got to create an outdoor office environment to visit with folks this very week, where we can help you change your life through a successful financial plan that provides you with peace of mind for the future. So how does a mutual fund generate out income in retirement? And so let's break it down and see exactly how a mutual fund works, because you have to understand that in order to understand where the income comes from. So understand, first of all, what a mutual fund is. It's a basket of stocks or bonds or both. If you are more growth oriented, you want those baskets to be more stock oriented. If you are more income oriented, then you want those baskets to be more income oriented. So that would be funds that either are pure bond funds or funds that are balanced funds, which are combinations of both stocks and bonds inside. We're generally a big fan of using more balanced funds because they have both that stock and bond component inside of that single fund that ultimately helps to reduce the volatility of the fund itself, but also generates out income during the course of retirement. So start there with an understanding what a mutual fund is. It is more than just a basket of stocks. Certainly does. Everyone, when people think mutual funds, they often, I think that mutual funds are only baskets of stocks. That's not at all the case. There's mutual funds that are bond mutual funds. There's mutual funds that are balanced mutual funds. If you are growth oriented, you want more on the stock side, and if you are income oriented, you want more on the balanced or bond side of things. So once you understand what a mutual fund is and the different types of mutual funds you can and in fact have and certainly want to have when you shift into the retirement income phase of your life, there's no less than 3 distinct ways that a mutual fund, particularly a balanced fund, generates out a major portion of income for a retiree to receive that income on a regular basis. So here are the distinct ways that happens inside of a mutual fund. First and foremost of all, the dividends. Remember, Okay, there's a portion in a balanced fund that is stock oriented. Those stocks generally are large companies generally paying a dividend. That dividend yield, usually about 2% right now. If you look at it in terms of the dividend yield on the stocks. So that dividend yield, as is always the case, dividends are completely independent of performance of the market. So that's piece number one, usually about 2%. Next piece is interest. The bond side of a balanced fund, if you will, has interest yield of usually around about 1 to 3% yield. Again, the interest payment on a bond is completely independent of performance because the interest payment is the coupon payment and that's what pays. Next is capital gains. So capital gains, 2 to 3% usually on a annual basis. What capital gains represents in a mutual fund is that if you are using actively managed funds, that means that there's some buying and selling of the underlying stocks inside of it. And so when the portfolio manager does that, he sells at a profit, guess what? That creates a capital gain, that goes on the books, and then is proportionally distributed to the holders of that particular fund. So what are we up to? We've got dividends, 2%. We've got interest, 1 to 3%. And we've got capital gains, 2 to 3%. Those are the three distinct ways in which a mutual fund generates income out along the way. Now, oftentimes people don't take that income out, they reinvest it, and they set up a set dollar amount to come out of the funds, but understand that the reinvestment of dividends, interest, and capital gains are purchasing new shares as those happen, effectively allowing the shares in the fund to stay relatively stable. So add these numbers up. Dividends at 2%, interest 1 to 3%, capital gains 2 to 3%. What do you got? You got 5 to 8%. That's pretty good numbers, right? I mean, that would more than cover my retirement income if I was spending at 4%. The interest, the dividends, and the capital gains. Really kind of amazing how that works. Plus, we haven't even talked about one of the best parts, which is the potential for capital appreciation and how that works over time, and why it's important to understand that with everybody living longer, you need that additional amount of growth on your portfolio. So there you go, mystery solved. That's how mutual funds can generate income, and more importantly, that's how you avoid a product that is high commission, high expense, limited liquidity, and involves complete loss of investor control. With that, we'll take a break and return after these messages here on Dollars and Cents with Joel Garris on News Radio WFLA and 96.9 The Game.